to Inovio Pharmaceuticals stock. Look, first thing I want to look at with INO is if you look at their monthly chart, it's just like this giant green candle and then this giant red candle. Like, that's not what you want to see with any company ever. Especially when this green candle goes from $5 to $15, and then this red candle subsequently decreases the value of the stock by almost 70%. Kind of crazy. This stock has really been on a roller coaster. One of my students actually made his first investment ever in Inovio. I think it was about a week ago. He bought it like $420, and he had no clue. Like, he just thought it was cool because of pharmaceuticals and also because of the virus. And basically his thought process was they're testing new drugs for the virus, therefore I should buy this company, which is a great thought process. Like, if you know that a company is doing something that's going to make major news, or if you know that they're producing some kind of new product that's going to have a huge impact on the marketplace, like, buy their stock. Like, that's a really smart thing to do. Especially if you have information that most people don't know, not necessarily like insider trading, but more so just like advanced knowledge of an industry. Like, if you have more knowledge of an industry than somebody else, you can make a lot of money by leveraging that specialization that you have in knowledge, which is really, really, really powerful. And so that's kind of what we get here with Inovio. Basically, coronavirus comes out, their stock goes up a whole bunch, then it comes back down. And then they say they're working on a cure for the coronavirus, and then their stock like goes up by a factor of 3 or 4, which is pretty freaking crazy. So besides that, like, what do we actually get looking at this company, which apparently is worth $1 billion? I mean, it's a pretty sizable company, especially for a company that makes negative $1.20 a share, give or take. What's actually, giving them all this value, and what are they really worth is the big question. First thing I want to look at are their earnings, and you can see that they're very, 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 very bad. They've gone straight down for 4 straight years, and they're losing about 1/10 of their market cap per year, pure value, which isn't usually great to see. When we look at their statistics, something kind of interesting happens. If you look at the book value for this stock is 34 cents. So, like, if they sold everything that they had tomorrow, on a per share basis, they'd be worth like 34 cents. Now, just to give you guys some perspective, this is a $7 stock. That's kind of crazy. And I think it shows because you've got your short ratio over here, and it's like about 20%, 18%. This is one of the highest short ratios I think I have ever seen on a stock. Like, anything over 15 is just absolutely crazy. Like, just massive, massive short ratio. So I want you guys to understand, like, if in any time in like the next week, because again, remember this stock, if you look at the chart, I mean, they've just gone down so much. It's kind of crazy. But what's interesting is because there are so many people shorting this company, there's so many people betting against Inovio, if, at any time in the next week, in the next 2 weeks, or really like in the future, like, if anybody decides that they want to, cover the short position, or even just set a stop loss on the short position, like if the stock goes up to say like $12 or something, all of a sudden what you're gonna have is basically a ton of people freaking out. And it's not gonna be a good freak out because 1/3 of the shareholders of this company are shorting it. Like, if they go to $12.50, you're gonna have a lot of people that are getting stopped out of this trade because they set a stop loss on their short position. And so that kind of puts this company in an interesting little situation where they could go up pretty high if they just go up a little bit and people start getting freaked out, closing the short positions, and thereby creating a really, really big demand for the company. And so what I want to look at here is not just what it's going to do in the next couple of weeks, which is pretty freaking important because you could literally make like 50%. Look at how freaking volatile this stock is. But kind of more importantly, like, what are the long-term prospects for this company? You see right here, we've got a 1-to-4 split, which is actually pretty great. It means one share. Here you got a 1-to-4 split, which basically only happens when a company wants to increase their stock price to stay listed on exchanges, which is pretty bad. Like, that's not where you want to be. And then the same thing happened just a couple of years ago in 2014. They had another 1-to-4 split, and just to keep their stock price up, which again is pretty bad. And so when you have a company like this, it's important to understand what's going on under the hood and what's actually making them work. So if we take a look at the revenue, you'll see that they've made less money in the last year than they've made ever for the past 3 or 4 years. So that brings into question, is this increase in stock price, is it based off of them making more money, or is it based off of what? Based off coronavirus, right? And so it kind of brings into question, how much of their future business can come from, them working to find some cure for the coronavirus, like every other pharmaceutical company out there that's trying to cure this disease. How much really is there to play with here? And I think that's really what's getting priced into all this volatility. It's just people freaking out about the news and then buying up a ton of these pharmaceutical companies. Now, I know from my investor friend who bought this stock before it exploded, he told me a couple of things. First thing he told me is the coronavirus is about the common cold. For every person who gets the common cold, usually that person will spread the common cold to 2 other people, just normally in traditional environments. They'll spread the common cold like 2 other people. But with the coronavirus, what happens is kind of interesting. When someone gets the coronavirus, they spread it to 2 other people, and then they also spread it to a 3rd person on average. So the average person will spread it to 3 more people. And this is, why it's able to grow so quickly from like 0, I guess now we're at a couple hundred, a couple thousand, to more and more. It's because of this idea of compounding growth. And you can have compounding growth in your portfolio, and you can use compounding growth to make tons of money. Or if you ever played any games, like play games, you'll see this compounding growth of like the virus. So that's kind of what we have happening right now with this global pandemic. And so that's really what's leading to a lot of these big plays in Inovio, is people playing off of the spread of this disease, and then what it actually does to that company, what it actually does to the stock. So let's look kind of holistically, like really, I think one of the most important things here, we look at financials all day, but really what I want to know is like, is this company actually able to develop a cure or something? Because from what I heard from my buddy, he said that these guys are basically submitting an FDA proposal for their new drug in just a couple of months. And then he said that by fall, they're trying to start human trials and human testing. And like, that's great, that's awesome. The question is, does that warrant buying the stock and holding it for like 3 months, 4 months, 10 months, a year? That's really the big question. Or should you be trading it on a shorter time frame? And that's really, I think, something that you need to look at to understand that. They're, one of the 30 companies that are trying to develop a vaccine for coronavirus. So like, there are 30 people doing this. Like, I'm not going to put all my money on a 1 in 30 chance it's this one company happens to be the miracle company that cures cancer. Like, you just don't know if that's going to happen. So I think it's important to actually look at the underlying company. If we go over to their site, the first thing you're going to see is coronavirus cancer treatment or HPV treatment, pharmaceutical, their 4th year stuff. I mean, I can't believe they don't say coronavirus on every single page of this site, because it would probably double their stock price. But let's go over to their annual report real quick. And what's interesting is this company, if you look up this company, they have, I think, 281 employees. Like, that's a lot of people working at a company. They've got like 5 subsidiaries. I mean, this is a lot of this is a pretty large multi-conglomerate company. And even though their market cap is only like, their market cap is big. Like, this is $250 million company. This is a big company. Their enterprise, this is a massive company. This is a $100 million company. And their annual report looks like this. Like, this is the first page of their annual report. It looks awful. Like, oh my gosh. Now, usually when you have companies that have this poorly formatted annual reports, it's either because they don't have an accountant because they're a brand new company, which is not true with Inovio. Like, this company, they went public in 1998. They have been around for a very long time, and apparently they used to be $150, which is kind of crazy. But my point is, this is not a new company. Nothing about what they do is new. Like, they should have somebody making this look better than it looks. If you scroll through this, it is like a black and white little thing until you have like this little graph about what they do on page 5, and then the rest of it is like just a couple of graphs splintered in. Like, it's not bottom of the rock. It's not the worst possible thing I've ever seen, but it's pretty bad. And so usually, like, I would expect to see a little bit more in these. And so I think what this does is it shows a couple of things. The first thing it does is it shows sort of the demographics of who their main investors are. The reason why is because you saw at the beginning, like, they put work in to have some of these graphics, put work in to make their things look nice. And so I think it shows a big chunk of their audience are sort of older individuals who are more used to looking at things like black and white charts, black and white graphs, and seeing like numbers, stats. These are the things they're working on. This is all their numbers, the percentage is. I don't know much about the medical space, so it's not my expertise. But like this right here, I think is something that really kind of puts the perspective on point here. Basically what they're focused on is they're focused on diseases. They're focused on their business, and they're focused on just developing cures to these diseases, which is really great. And you can see like the phases that they're in, and they're making really great development on multiple products, multiple drugs, which I think shows that like they have the ability to actually produce a product. Like this drug looks like it's pretty far into development, and a bunch of these look like they're like almost halfway done, almost halfway to market. And some of these are actually partially funded. Some of these are independently funded. It looks like some of them are Patriot funded. I mean, you've got a lot of things that they're doing well, and that's good, because what it shows is like this company can actually make a product, which is something that's kind of rare in the biotech space, in the pharmaceutical space. Seeing someone like that can actually make a product is kind of is rare, and which is really weird. Going through this report, you can see a lot of the different things they make besides the coronavirus drug, and this is really what you want to see, not necessarily for diversification's sake, because, to be honest, this stock is not going to move very much based off of their smart delivery system. It's going to move almost exclusively based off of the development of the coronavirus stock, at least in the short term. But it's important to see that they are able to make other products and that they have experience with other industries or other diseases, because it validates their ability to actually create some kind of vaccine or create a cure for the coronavirus or whatever it is that they're working on now. And so it's good to see them working on HPV, because like these are things that they can charge money for and that are actual viable business. And I think that's probably one of the reasons these are one of the few stocks that are really in the 100 millions trying to work on the virus, because they have other products. And if you look at their competition, like they actually have competition because they're trying to commercialize their product. And so because of that, like they do a pretty solid job just having if you read, if I was going to hold this for over a year, I'd be looking pretty closely at this report. And I cannot, but they try, right? And they show that these are all the laws, and this is everything about the company. And so even though it's not like the prettiest thing ever, like this is a pretty solid report. They've got most of the information that you would expect here. And it's pretty freaking long too. But it's really cool that you can see like they're going through the process, they're going through the FDA, and they're really trying to make their company a solid company. And I mean, just like glancing over the financials real quick, because we'll get to that in just a moment, kind of the biggest thing here is like they're trying to keep quality notes, trying to keep quality bonds, they're trying to stay liquid, they're trying to have working capital. Like they're doing all the things that a good company should do. They're managing foreign currency. Like when you see a company managing foreign currency risk, usually like you've got a pretty great company. I came into this thinking that these guys are just going to be another one of those companies just trying to cure some disease and make $1 billion. But really this looks like a solid company. It's got a pretty decent product line. And they've done really poorly. So the question is, okay, look, they've got this great annual report, they're doing all these cool things, that's great. They've got all these companies, they've made all these acquisitions. And guys, I don't expect you to read through these reports this quick. I'm just really used to glancing through these, and I kind of know what to look for. Basically, they have control of the company, they have control of what they're doing, and they understand what's going on with what they're doing, which is really powerful. And I think that's kind of the biggest takeaway from this report is they're reporting like what their employees get paid. They're reporting what they go through, and they're showing everyone like what they want from this company in the future. So the question really becomes, what's going on with their stock price, right? How did they go down for so long and then just recently have this really big spike? And I think it comes down, a lot of it comes down to their cash flow. It's not necessarily their book value. If you look at their book value, like I talked about earlier, it's pretty low. It's only like 30 cents. So a lot of it comes down to like them actually making money now in the future. So let's take a look real quick at the cash flow. And the first thing you're gonna see here is over the past couple of years, they've been losing a lot of money. They've been losing more and more money. Now, usually this happens because of one of two reasons. The first reason is they're developing something new and they're working on like a new product, or they're investing in like R&D, and they're maybe they're taking on debt to work on something new, and they're trying and they're putting up their best efforts to create something new. Now the second option here is that what they're doing doesn't work, and you'll see this a lot with bigger companies. Very recently, GE was one of these companies where what they were doing didn't work, and their stock was going down and down because they got into too many sectors. They tried to do too many things. They had too many arms. And because of that, their stock freaking plummeted. And so that's kind of one of those examples where if what you're doing doesn't work, your company can take an L from. But I think with Inovio it's a little bit different because like this is a pharmaceutical company and like either they make a drug that works or they don't. Like there's not really an in-between. There's not really a it doesn't work. So with them, I think most of these expenses, if we look at this report, you can see a bulk of these costs, I mean some of them are compensation, which makes sense, but most of it's working capital. And I mean they're spending $100 million a year on working capital. And a bulk of that is going into what? It's going to investments, and some of it's going into property because I guess you have to have machines to do like pharmaceutical research. But most of it is basically like investing. From what I can tell, looking at the report, they're investing in like making these drugs and facilitating their employees or their scientists or chemists to go and make these drugs. And you can see they're spending a lot of it is from cash that they have, right? They've got like 20 billion in cash here, and then they have or 15 and 20 million. But really what they're doing is they're taking in kind of new money to bring in new investments into their like drugs, right? And then they're trying to test these drugs. Like that's all they're doing is trying to test these drugs. And they go through the different stages of testing drugs. And right now they're at like stage 1 with coronavirus, and then they're trying to get to human testing soon. And like all they're doing is just testing and testing and testing, because that's basically what pharmaceutical companies do. And that's why like traditionally it's a little bit of like, you know, a riskier sector. It's like, I mean, you can look at a company like this and you can look at pharmaceuticals and really your best bet on what's going to happen next with the company, it just comes down to like, do they cure this disease or not? And that's what can really make these pharmaceutical companies a little bit more of a gamble, because like you just don't know what's going to happen, especially in the long term. It's really difficult to understand, like, are they going to go up or are they going to go down? Like at the end of the day, it's really just based off of whether or not these investments they're making, these new things they're doing, actually turn out to be like worthwhile. Like it's, you know, are they going to be the cure to HPV? Are they going to cure this virus or not? And that's something that you can't usually tell just looking at a piece of paper or reading an annual report. It really requires in-depth knowledge of the company, which is what most people like don't have. This is like basically insider information about like how good the drugs are. Like I don't know them. My buddy, on the other hand, he's been studying them very, very hardcore. He's a chemical engineer, and basically what he's been telling me is that these guys are coming pretty close to curing their coronavirus. Now, look, I'm not going to make an investment based off of some guy saying that a company is pretty close. Like that's bull. Like I don't care. But what I can trust are stock charts, and that's what I want to look at here. So coming into this analysis, like I just want you guys to understand, there is not a chance in the world I would own this stock for more than a month. Like just nada, zilch. Like I would not hold this position for more than a month. It just doesn't make sense. I think there are some pretty nice plays to be made here, especially in these day trades. So I've day traded these guys a couple of times when they were a little bit of a cheaper stock. I traded them on this day right here. This was a really nice day for them. Let me go over to a daily chart real quick and kind of zoom out and show you where some of these resistance and support lines come into play. So the first thing you're going to see is you got a pretty nice support line here and a resistance line here. And these are kind of two lines I was trading on this day right here when the stock popped up a bunch, which was a little bit before the really big growth, which is really kind of insane. If you're looking sort of longer term, if you look maybe at the max monthly, you can see basically most of your support resistance lines are going to come from the recent time frames, just because the stock used to be like $100 and it's not $100 anymore. So I would put a pretty solid level kind of right about here. Like this is a nice level right about, first of all here, I mean this is something a little more zoomed in. This is going to be a hardcore resistance for them to break. But also I really, really like this line right here. This has a bottom here, it has a top here, it's got some consolidation here. Like this is a solid line, I'd say, for this company. And I think $20 is really gonna be that tough point for them to break through. And we kind of saw that historically, like they couldn't really get to 20 in their recent move. So the question now is, are they gonna get to 20? And I think they just need to kind of break here, and then they should be off to the races. You've got like a little bit of a level here, but this isn't as strong of a level, I'd say. You can look back a little bit more, and this is kind of a W setup, so I would definitely put a line at the top of this W and the bottom of this W. But besides that, I mean, there's not much. Like maybe a line here, maybe just because of this hammer candle. But besides that, when you come into looking at this thing in the short term, it's got a lot of room to go. Like, these are a lot of lines that really don't mean much, and it really kind of comes down to, first of all, news. Okay, news is going to be one of the most influential things on this stock. If we go back just to their stock page and we go to their summary, you're going to see like these guys are down 25% today. They were up like 200% almost a week ago or so. A lot of that's going to be based off of pharmaceutical news, like whether or not, cure a disease or not. You got a lot of people pissed off because they lost a lot of money buying the stock super high, which is kind of sucks. Apparently they did some misconduct with how they were publishing data or something. You'll see this a lot. Like, the stock will go up. This is kind of interesting. A stock will basically go up like a bunch, and people who bought it right here will sell it right here and make tons of money. And then you have sort of the people that don't know what the hell they're doing and like just aren't as informed, and they'll like buy it right here. They'll be like, oh my god, it's gonna go to $1 bajillion. And sometimes it goes to $1 bajillion, but most of the time it doesn't. And it's okay, right? Like, if you've got a lot of upside, all you have to do, really, really, really simple, all you have to do is set a freaking stop loss right here. And as long as you have a stop, like, you're good, right? You don't lose $100,000, it looks like on here, in excess of $100,000. Yeah, you don't lose $100,000 when you just set a stop loss. But what's so crazy, most people don't freaking set stop losses, and they hold it all the way down. And I know particularly with Inovio, the stock went down almost 40-50% in one day. Today it's down 25%. Like, can you imagine losing 25% of your portfolio one day? That's really bad. And so that's why it's really, really critical in every single position you make, especially the ones that you're going to hold overnight, that you do have that stop loss level. It's just really important for any investment you're making. So just looking a little more at the news with these guys, really that's, I think, going to be one of the biggest, not necessarily for the stock, but just like, if there's a coronavirus explosion, then their stock's probably going to do really, 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 really well. And that's not something that you can really like predict. I mean, it's pretty good probability the coronavirus is going to go up, but it's like, see, this is kind of the stuff that really changes stuff. So they got a really big grant recently to develop the coronavirus vaccine. And so that was something that really made their stock pump up. And so as we look at the charts, like, really, one of the biggest things we're looking at here is just a reaction to news. Now, personally, I made a trade on here on this green, red, green setup. Basically, I saw this green and this red and this green. If you guys don't know, when you have a green and then a red and then a green, usually the next candle, it opens above here, it opens here, it explodes, it goes up, give or take the height of this right here. So you add the height of this to it, and that's kind of where you get your price target. So I sold a little bit earlier at $14 based off of this, and then it went up to 20, and then it had this massive sell-off. My buddy is still holding it for reasons that are beyond me, but he thinks like in the long term it's gonna like solve the world and cure. Like, I'm like, yeah, dude, maybe in like a year their stock will pop up a little bit, but like, it really like, it's just not worth like the time value of your money to hold this stock praying that it goes back up, and B, like, this is a really sketchy company. Like, if you look at their history, they've gone up and down really, really fast, a lot. And, I don't want to be a long-term holder in a stock that goes from like 12 to 1. Like, that's really bad. Usually when you have these gigantic spikes, they're usually short-lived, like short-lived gigantic spikes. If you look at stuff like the VIX, I mean, it kind of visually shows what we're looking at here with Inovio. You've got a lot of volatility in the market right now, and that volatility is basically what's being translated into the stock price. Is you've got this gigantic spike in volatility. Like, that's not going to last forever, and I'm sorry, pardon me with all these trend lines. I'm sure, I really apologize for that. That's a hideous chart. But like, this isn't going to last forever and ever and ever, right? And so it's the same thing with this stock. Like, maybe they might do something, but I mean, if you have a giant green candle and then a giant red candle, that's usually a reversal pattern. For a company based on news, it's not as strong. Like I don't know what the stock's gonna do. No one really knows like what this stock's gonna do unless they have insider information about the company or about the industry or about their treatments or about the science that they're doing. Like, I don't know what science they're doing. I'm not a chemist. But like, unless you have that information, this is a really tough thing to predict. And so in the long term, like, it just doesn't make sense. And so the one last thing I want to cover here before we finish this up is something my friend said. Like I said, this was one of his first investments ever, so he's kind of new into the space. And he said something really interesting to me, like this date, with the 10th, right after it went from 19 to like 10. He said to me he saw this gigantic growth, and then the stock was down here. It's this idea of contrast theory, okay? So there's this really big contrast between what the price was at the other day, like 20, and what it's at now at like 10. And it sucks pretty hardcore when your investment goes down 50% a day. I've had some options that have gotten up like 75% a day, and like I'll buy the option at 10 cents, and then it'll go to like $3, and then it'll go down to like $1, and I'm like, crap, I just lost like 75% of my investment. But then like if you look at it from an objective point of view, you just multiplied your money by 10. And that's the same thing that happened to my buddy. He bought this stock at 4, and even though it went up legit, and he lost like half of its value, like you still multiplied your investment by almost like 2.5, right? Like that's still a really good gain. And so, you know, if you set a stop loss, you would have more money. But it's like, especially a trailing stop loss, with a stock like this, a trailing stop loss works really, really, really well because you only get stopped out when it goes down. Like for me, I would set a trailing stop. Like if I was in this longer term than when I was in and I didn't have a price target, I would probably do like probably about a $2 trailing stop loss, and it's about a 20% trailing stop loss with a $10 entry. And then you would have sold it about 18, which is pretty freaking good, assuming there wasn't enough volatility on that day to mess up your trading. If you zoom in a little bit, if you look at like the 1 hour chart, you can see that basically it opened up at its high of day, and then it just went straight down really quickly. Holy crap! That's why you want to set a trailing stop loss or stop loss or something like that when you get into an investment like that. But anyway, he was contrasting the curve price with like what it used to be versus contrasting it with what he actually bought the stock at. And that's a fallacy that you really don't want to fall into, because what it does is it makes you focus sometimes on your flaws, sometimes on your mistakes, sometimes on, oh, I'm so sad, I didn't actually get to invest, or I didn't sell at the high, or something like that. Instead of thinking objectively, like, is this stock going to go lower, or is this stock going to go higher? And that's really the kind of clarified mindset you have to have when you make investments like this. You need to think about it objectively, like somebody who is just now buying the stock. Like, would somebody who's just now buying Inovio think that this is a good stock to buy, or would they want to sell it? And, you know, for me, like, I don't know, this is a really hideous chart. Like, this is a difficult stock to trade right now, just because it's so highly influenced on news. And so, if you don't know what to do, you make a bunch of money, usually the goal is to just kind of like take some of this off the table, instead of what my buddy's trying to do. He's trying to say, oh, I think that in the next couple of months after they pass these test results, or oh, in the next couple of months after they have these trials, they'll go up to their previous highs. Or, you know, a phrase he said that stuck with me a lot was, I don't know if they'll go up to their top highs, but I'm sure they'll go near their highs. And when you have people referencing their highs, I saw this a lot with Bitcoin, right? When Bitcoin exploded, and then they kind of went down a whole bunch afterwards. You had a lot of people that were like right here, and they were talking about like when Bitcoin gets to its highs, when it gets to its previous highs, when it gets to its previous highs, when it gets to its previous highs. At least so far, that hasn't happened, and it's cost a lot of time by my own portfolio waiting for that to happen. It's taken a freaking while. Like when you have this contract where, you know, get to previous highs, there's this really big this gap where people are trying to like fool themselves into thinking that they'll get back up to this price, when in reality, like you just, at least with some investments, like you just don't know what's going on. And I think that's probably the deal with Inovio. Like, unless you have some kind of insider information, like you just don't know what this stock's gonna do right now. And frankly, it's just like a sketchy investment. I mean, basically, there's just nothing here. I traded it because I saw a setup. If you see a setup on any stock ever, then trade the setup. You will do phenomenally well. Every technical setup that exists, at least the ones I teach that work, like those are great setups. If you don't know the setups, go through like any of my classes or my courses ever. There's some on here that anyway, like the red, green, red candlestick setup is a really good setup. So if I see a setup like that on this stock, like that's a good setup to trade. It's just a good set. It's a great setup. And so if you see setups, trade a setup for sure, 100%. If these guys curve up and they go to like $15 and they make an ABCD setup in the next couple of months or the next couple of weeks or something, then 100% go in, trade the setup, and then get out based on the setup. But from a fundamental point of view, this stock doesn't look great. The company looks awesome. I love it. I really was expecting less from this company when I got into it. This looks like a really cool company. But like their performance is just bad. Like this is a kind of stock, from the company, from the fundamentals that I read about this company, I would expect this stock to basically look like it just kind of like AbbVie, right? Like ABBV, ABBV. I would expect this stock to look like AbbVie, where it just kind of goes up, goes up, goes up, slow, compounding growth. They have multiple products, they have multiple drugs. But the thing is, the difference between this company and a more established medical firm like AbbVie is, like, this company doesn't really sell anything that's really popular. Whereas, like, more established pharmaceutical companies that are big and growing and have products like AbbVie are actually selling things that people want. You know, if they cure the coronavirus, they're obviously going to be selling things that people want. But right now, they're really just in the development phase. And to be flat out, that's a gamble. Like, I don't know what's gonna happen. I would definitely have these guys, I've seen them on the pre-market screener for like 2 weeks straight, like at least 4 times. And they've been a phenomenal trade in the short term, but I wouldn't hold this for more than a week. Like, I would barely hold it for more than a day. It's just an extraordinarily risky stock, unless you can trade post and pre-market, like, and then you wanna go through managing all that stuff. This has really just not been a great investment, you know, in the long term, especially recently. But I mean, in the long term, it's been, it's really hard. It looks like the time, because like they're paying dividends and earnings and all that stuff. Or I don't think they're paying dividends, but I mean, they have like solid negative earnings over and over and over and over again. And when a company just continues to lose money forever, like eventually they're gonna run out of steam or money or something. And so for me, like, you know, I just don't know with this stock. It's not really a great setup. There's really not much to trade here anymore. But hey, you know what? It's a really volatile company. And so if you do see a technical setup, it could be great. Like, honestly, this is a solid company just to trade, because it is really volatile, and it'll double in a day or triple in a day or go down by 50% in a day, and you can short the stock. The options on these guys, do they have, if you look at the options chain, like these options are kind of crazy. Like, they go from like 10 cents to like $4. I know the ones that expired like this past Friday were up hundreds of percentage points. So if you can predict what they're gonna do, honestly, I really should have leveraged this trade with options. I totally didn't, which was silly. The options were up 450% in like an hour. And so like, this is a really solid volatile stock to keep in your watch list, and something that's a really great trade in the short term. But for long-term holds, it just doesn't have it doesn't have an established history, and it just doesn't really look like it makes sense to have in a portfolio, and not something I'd really hold. I think that's true for a lot of companies in the pharmaceutical space and the medical space. Unless you're like super well established, like AbbVie, I mean, it's just really a risky position. And I think that's shown a lot through, if you just look straight up at the company's beta. The beta on Inovio is 2.22, and I mean, that's nothing too absurd, but it's up there, right? Just looking at the, like, I mean, all it does is go down, and so, you know, hopefully it can turn around from that, and hopefully it can change. But you know, the way it looks right now, basically the only thing I think that could be a redeeming factor for this company, if at any time in the future it does have a redeeming factor, is if you look at the MACD. I think the MACD could be the one thing that could be a shift on this company. If you look at like the monthly MACD or the weekly MACD, like if this MACD can have some kind of reasonably solid cross, and it kind of did cross a little bit, but it's just not like a solid cross. If it could have any kind of like well-established cross, and you kind of combine that with stochastics, then I think you could have something to work with. I think you'd have something to play with. But just looking at it as it is, there's not much to trade, and it's also just like very simply put, if you look at like the 50 monthly moving average, which is going to be the same, give or take, as the 200 weekly, the stock is at it real quick. Stock is basically at that level. So the question now becomes, are they going to stay above that level or not? And I mean, if they can cross over that level, then they'll be in a good position. If they can hold above that level, then they could be in a good position in about 4 months or so to make some kind of decently qualified medium to long-term investment based off of some kind of underlying fundamentals. And if that happens, then that's great. If that happens, then you know what? That could really be a solid investment, and they could do really well. But as it stands right now, like, this is really early stages of it, and this is really kind of a risky time to try to get into it, just because you don't really know. But with that said, if this purple line, which is the 50 moving average, crosses the 200 moving average on the weekly, that's, I think, probably the one thing that could get me really into this stock, because last time that happened, the company went from 8 to like 16 and or 15. So if this has a golden cross, I think you could have something special here. It looks like, just based off of the way these paths are coming together, This will happen in about April or May if it happens. So I would definitely watch this stock around April or May for a cross of those moving averages, because if it crosses and it holds above that 200 weekly moving average, then you could have something really special here on about an 8-month or a 9-month trade, or even a long-term investment if it does make that kind of golden cross. And it does have some kind of news that says they have a reliable, formidable company. In the future, this could be a really solid company, in my opinion. So I think definitely worth coming back to and looking at if they make that cross. That could be the determining factor. Because again, last time they made that cross, they really did really well. The first time they made it, but here's the other thing though. So if they make the cross, then they fall below, then they're screwed. And so that's what happened here. Is they crossed over. They had a golden cross, but then they kind of fell over. Same thing here, they had a golden cross and then they didn't really do anything with it. So you want to make sure that when they do have that cross, if they do have that cross, that they actually maintain it. And if they maintain it, then you can have something really good here. Because last time they maintained it, they doubled. So if they can maintain it for probably a month, this is going to be a little bit of a slower trade, but it could definitely be a trade worth investing in. Obviously a crazy volatile company though, so you do want to make sure that you give it a little bit more time to actually validate any setups that you do trade on. So I think that's probably the biggest takeaway from Inovio. Hey, this is John. I want to thank you so much for making it to the end of the video and hope you get a ton of value from the stock that we just broke down and hopefully learned a lot about them. Now, what's cool is if you have an investment that you think could look really nice, or maybe it's a potential investment that you're on the edge about, or maybe it's a stock that you're holding right now that you're just a little bit curious about, or maybe you want to get an outside perspective on it, what's cool is if you comment down below with the ticker of the stock, I'll actually put it in Queen for a potential new video coming out. Now, make sure you also subscribe so when those new videos do come out, or when these new stocks do come out, you'll be able to YouTube will know to send you the stuff, and if you click the bell, you'll actually directly get a notification so that you don't miss any of the new investments that we break down on this channel. Now, what's also cool is if you want to learn how to outperform 99% of investors and radically limit your downside, even if you can't pass a finance test for your life or have nothing to start with but a few spare bucks, I want you to open up a new tab right now, or go to a new browser, wherever you are, and I want you to go to stockmarketsecretsexposed.com. And inside Stock Market Secrets Exposed, you get instant access to a course I used to sell for thousands, a very high-level seminar I gave. The students literally go through and in their first month make 5 figures, and I can't guarantee anything, but I know for a fact that this stuff works and it's gold. What I want to do is I want to give you this course I used to sell for tons. I want to give it to you completely for free so you can learn the top 35 secrets that you can use within the next week to really crush your portfolio, really double it and radically limit that downside. So if you want instant access to that, what you got to do right now is open up a new browser tab and go to stockmarketsecretsexposed.com, and I'll send it to you for free. Okay? Sound cool? Sound fair? Thank you again so much for watching, and I will see you either in another video on here or over in the masterclass. Thanks. Bye.